All right, we're back. Calls of the day now. Let's begin with Netflix. Price target gets cut. Josh, you own it. $265, down from $350. That's at Guggenheim. They do maintain a buy, but the air's obviously come out of this balloon.
I mean, a long time ago, this was 700. Yeah. And a lot of the companies that are now neutral on it were at buy. When, so I don't really pay attention to that stuff.
But what about the stock from here? Let's just play it that way, regardless of whose call said what.
Netflix has a big run of high-profile content coming in the second half of this year. I think what they really have to demonstrate to the street is that things like Stranger Things season 4 and the conclusion of Ozark and some of the newer stuff, they have to really demonstrate that is enabling them to continue to raise prices, and more importantly, their plans for an ad-supported version, which I would expect sometime this fall, probably be make or break for whether or not this stock can recover. So I'll be paying attention to that. I bought a whole bunch after it crashed. We'll see what happens. I'm not terribly committed to this as a long-term investment. Right now, it's still a trade.
Okay, so Pete, to you, Disney. Price target gets cut to $135 from $160 at Truist. Of course, they maintain a buy as well. But what's your take here?
Well, it makes sense that they'd have to bring that price target down, Scott. I mean, given where this stock actually is and where it's fallen down to. I think that going into earnings, you and I think it was on the OT that we talked about this name, and we were talking about the fact, are people going to focus just on streaming? Because if so, the stock was going to go lower. Or were they going to give it a chance and actually look at what Disney is as a company? Because Netflix, yes, that's a streaming company. Disney, streaming is just one of the pieces of the puzzle, right? And I think what came out of that was people looked at the streaming numbers. They understood what they were looking at, but they were starting to see that they are doing better in a lot of different categories that are very meaningful as well. Far more meaningful than just looking at streaming. So I think there is a chance to see this stock actually make a pretty decent rebound. And I totally get why they actually brought this price target down. Based upon where it is right now and obviously acquisition through streaming and everything else, there is some things going on there. But I think the core product of Disney still has a lot around it, and that's going to give this stock a nice opportunity to go a lot higher than it is right now.
Okay. Now to a call, Shan, that I want to describe as we love it, but we sound like we don't. And it's Home Depot, Wells Fargo, named best idea. Right? I mean, that says, all right, we love this stock. Overweight. All in, we come away from our survey slightly more cautious on hard lines overall, but broadly remain constructive on the core best-in-class names such as Home Depot. They go on. We're inclined to believe that home improvement spend should remain relatively healthy. So best idea, overweight, reasonably confident that spending will remain healthy.
Well, that's really just a call that they're concerned about consumer spending slowing, which I think is a reasonable expectation in the second half of the year. I think it's important to remember that Home Depot is going to be a beneficiary from being housing adjacent. I think that they've been caught up in this expectation that existing home sales are coming down, higher mortgage rates. There's very little supply in the marketplace. However, many of us are now anchored or tethered to our homes even more than we were previously by those lower mortgage rates that we have. And so I think one of the things to think about is, are you going to continue to do things to improve your home? This is not a fix and flip trade. This is not 2006. This is certainly one of and they have done an excellent job on executing on their e-commerce strategy as well. So this is one of our favorite names in the portfolio, and certainly where I would want to be when I think about consumer discretionary.
All right.